All right, you guys, right now in this part of the course, we're going to go over accounts payable and what that is. So I always start off by going to my chart of accounts. And what we have to do is we kind of have to put on two hats today and work through this. So if you remember in our previous videos that we've done some invoices for our clients. Okay. So I want you to put on the hat of right now, I'm the real accounting team and we did some invoices for some work and now we want to go and we want to send that invoice to you for the services that we provided. So what's cool is you can always come up here in this left-hand corner and it's going to keep a list of all the transactions that you've done. So if you remember the 150, 300. So I'm going to go to the 103. This is me as the accountant. I provided some tax prep, some bookkeeping, some consulting calls, and now I'm going to send this invoice to you. And so what we're going to do on your end is now that you have received this email with the invoice, we're going to show you how to go in and enter that as an accounts payable on your end. So an accounts payable is going to be showing an expense that you're going to be paying for legal and professional fees. Okay. So what we're going to do is we're just going to close out of this. Now we're back to you on your end, and you just got a bill for the legal and professional fees. So what you're going to do is, if you remember, you could go up, you could put it in your register as an expense or a check. But what we want to do is we're going to go over these items right here as a bill. So we're going to use bill. We're going to use pay bill. We're going to show you print checks. And then we may even touch on vendor credit. So ignore everything else that's in here. We're just going to focus on these few items right here. Okay. So bill right here. So the reason why we use a bill is because of this feature right here, this bill number. So if you're getting a lot of bills that you need to pay, and you're issuing checks, you're paying by debit card and things like that, we want to make sure that we're not double paying the same invoice. Okay. So in this example, we're going to use one invoice. And if we type in the invoice number and the bill number, if we went in, we tried to type in a bill again for that same invoice, it's QuickBooks is going to say, hey, you've already paid this invoice. So think of that. You may be a little bit of a smaller business, but when you grow your business, you're getting all these invoices. They're coming in monthly and your bookkeeper's just paying them out without double checking. You could be double paying and wasting thousands and thousands of dollars. Okay. So what's really cool is you can go in and we could set up a vendor for, because, well, I'm going to just show you the invoice real quick. We're just going to pull that up. So I have that invoice sitting right here. Okay. So this is the invoice that you should be seeing. So it's an invoice from Real Accounting and it's for the tax prep of $100. Actually pulled a different invoice, sorry. And we need to make sure that we get this paid. So I'm going to slide this out of the way. And so one cool feature that QuickBooks has is if you click this little autofill right here, you could actually just drag this file into here. And what it's going to do is QuickBooks is going to automatically start to fill in the data for you. So right here, we're at 77%, it's mapping. So it's saying, hey, I found a new vendor and you could set this up. So let's go in, let's click Save Vendor. And now it's set up our vendor right here, Real Accounting. It has the invoice over here, which when we get into, I'm a tax professional as well. So if we get into audit, preparation, we want to have all these invoices in case we're ever audited. We can provide the documentation to the IRS. So such a cool feature. So the invoice is going to be attached. It's pulled in the description, the amount. Then all we would need to do is go in and put what the invoice is for right here. And so the thing that we want to be careful for, so if you remember when we first started talking, we were talking about not duplicating the invoice. So right here we have an invoice number 1002. So now in the bill number we have 1002. So this is going to make it that if they sent me another invoice for $100, we're going to know that we already paid it, we already accounted for it. So get rid of the invoice that they're trying to duplicate to us. Next thing that's important is putting in the terms. So some invoices would be due on receipt, maybe in 15 days, maybe in 30 days, maybe 60 days. So over here to the left, we have our terms of net 30. So let's bring in the terms. Let's bring in the invoice date and the due date based on the net 30. Okay. So if we change that to net 60, pushes out that due date. So the reason why this is important is when we go to pay our bills, we're going to have a list of all our bills that we need to pay and based on the terms right here. Okay. The other thing I wanted to talk about was the bill date. So the reason why this is important to use the exact bill date is when we're using the accrual basis, the date of the invoice is the date that we're getting the actual deduction. If we're using our other flavor cash basis, we wouldn't get that deduction until the 31st, and this may be into the next year when we actually made that payment. It's going to show up in our profit and loss reports. Okay, so this is pretty cool. But if you didn't bring in that invoice, you would just type in, hey, I got the invoice, it's real accounting, my terms, my bill date, my due date, my 1002 category. So you can see how QuickBooks is saving us some time with that feature just automatically. So next thing that you're going to do is you can come down here, click Save and Close. And then what we recommend is that you get into a rhythm of when you actually make these payments. And so you're going to set aside certain days where you go in and you go to your Pay Bills feature right here. And now we have our invoices that we've entered as bills, and they're going to be stacked up in here. And so the reason why this is important is we want to come in, we want to put the bank account that we're going to be making these payments from. And this has a balance of $5,100. So when we're cutting checks, we want to make sure that we're not issuing any bad checks that are going to come in insufficient funds, right? We don't want to go to jail. This is going to show our payment date, our starting check number. And so it depends on if you print checks or if you make these by debit card. All these features are here to protect you. So when we click on this, we say, hey, we want to pay our $100 invoice. The total amount comes here and it shows that we have a balance here. And so all we have to do is just go in here and we can save and print, or we can save and close. So what I want to show you right now real quick before we do this, we'll come back to this screen, is I want to show you, I think it's always important to see on the reports how the numbers are adjusting our financial reports. So remember, we have our standard reports. We love our profit and loss. We love our balance sheet. And so we need to look at both of these because some of the items are hitting the balance sheet and some of them are hitting the profit and loss. So our profit and loss, remember, shows our money coming in and our money going out. And then we have double entry accounting where we have two sides of the transaction. So right here, so I've just been doing all dates, accrual basis, right? Run report. We have our legal and professional fees for $100. Remember, if we go to cash basis, that's not going to be in here. So we haven't actually paid it. We've only accrued that. Okay. So now that $100, the duplicate side, not the duplicate, but the second side of the entry, we now need to go to our balance sheet. And then we'll just go to all real quick. So that second side of this is now hitting your accounts payable right here. If we go to cash basis, there is no accounts payable. So just got to learn those flavors and learn as much as you can, about, if you're not an accountant, just going in and making sure that you're learning the difference between the two. Okay, so now we're showing our $100. Another report that we like to look at is we can always come down to here. So who owes you money, then also what you owe. And so you have what's called an accounts payable aging summary that we like to use. What this is going to do is this is going to show all your accounts payable that you have. and they're going to break them down by current. Within 30 days, we're starting to get behind on 60, getting behind on 90, 91 and over. So when we go to do a tax return, we're going to pull your accounts payable report. If we see a stack of 91 plus, then it usually tips us off that maybe we're not paying our bills the right way. We're not going through the enter the bill, the pay bill, and the print check steps that we're going to be going over. Okay. Another report that you could pull, and that's what's cool with QuickBooks. They have so many different ways. It's just getting everything customized to the way that you like to see it. You have unpaid bills right here, which is just a quick and easy report. Kind of like this one is it kind of gives us the step-by-step of what's happening. Okay. So right here, this would list all of our vendors, all of our bill types, the invoice number, the due date. So this is now showing that we're past due 25 days. So great report right here. Okay, so now that we've seen that, now we want to actually go in where you go to the, remember we're working on bill, pay bill right now. We're going to pick our bank account. So this may have multiple bank accounts, maybe have your credit cards in here. So you want to make sure you're using the right account that you're going to be paying the bills from. You're going to be using the payment date, starting check number. So if you have a stack of checks, make sure you're starting with the right check number. You're going to click the invoice that you want to pay. You can adjust this as well. And showing that, hey, I'm only paying $90 out of the 100. So when you pull that other report, it's going to show that you still have a $10 balance. Next thing that I'm going to do is I'm going to click, just going to click Save and Close right now. So I want you guys to see what's going on in the back end. So now we're in our unpaid bills report. You can see how the data is gone. We're going to go back to a profit and loss. And so once you get used to how the system's working, you're not going to have to bounce back and forth between all the reports. But it is good as you're learning to just see how everything's going. So we're on the accrual basis, paid the $100. And then now we want to go over to our balance sheet. That's why I love this Right Tools is when you're bouncing back and forth. And I think they're coming out with an affiliate program where we can go and get certified with Right Tools and then be able to get an affiliate link on our side to push this product a little bit more. So now we're on the accrual basis. Remember how we had an accounts payable in here? Now it's back to zero because now we've actually paid that bill. So now, as we've been working, we've been showing you the bank register. So I want to go in through the register the way we've been looking at it. I think it just makes a little bit more sense. So you go to the chart of accounts. Remember how in that pay bill we used our sample bank account. And then right here, our bill payment has reduced our cash, went from 4,650, paid our $100 accounts payable, dropped this down. So hopefully you're starting to see that flow of how everything is transacting inside of QuickBooks. The other thing I wanted to make sure that you do to catch all these features is you want to go up to the gear icon in the top. You can go to your account settings. You can go down to advanced. And these have just little different things that you can turn on and off inside the software. But you right here, I would turn on, warn me if a duplicate check number is issued. That's going to make sure you're not duplicating any checks. Then also warn me if I enter a bill number that's already been used for that vendor. Okay. So that's going to double check any duplicates there. So let's just go and try that. So let's go in. Oh, sorry, not an expense. My bad. I'm going to click this. We should say enter bill instead of bill. Bill is just the one word that's it's kind of hard to find. So this time we're not going to use the autofill. say, hey, real accounting, net 30, 12/1, and I now got a second invoice that I needed to pay this $100. I'm gonna click save and close. Oh, duplicate bill vendor number. A bill with this number 1002 is already used, entered for this vendor. Save anyway. No. We just want to go to our file, make sure that we paid that invoice. This just saved us $100. I'm not overpaying someone that we didn't owe money to. So super cool feature. There's always a lot of fraud. Think of a big business. Someone could just, I mean, you can watch those A&E movies like Greed and things like that, where they, I was just watching one where there's a guy that owned a restaurant across the street was a business, and he just sat there and sent him invoices every week, and the company kept paying him. He made hundreds of thousands of dollars from a company just across the street that he was just sending them random invoices to, and they kept paying him. So when you're running a business, you want to watch out for people that are stealing from you. That can come from just a random person on the street. It can come from inside of from employees. It can come from partners. This is where you're going to be monitoring that and checking your register and making sure that the cash is always being protected. Okay. And the money's going where it needs to go. So, if it's a random vendor, you could always go and do some research. You could call the vendor. If it doesn't sound legit, don't make the payment until you verify that you actually owe those funds. And so things like that can go a little bit more. You can do POs. A PO converts into a bill. So if you have employees that are out there putting stuff on your business account, you want to make sure they have purchase orders. Turn those orders into bills, and go from there. Also, if you have employees that have credit cards, make sure that transactions that they're running are legitimate. I've seen that happen with businesses as well. Employees have credit card, owners just get too busy, don't go in and check every little receipt, what's on there. Meanwhile, the employees are stealing from the business. So it just makes it to where the business can't be profitable. So anyway, next up here is as we're getting towards year end, we want to make sure that, as I've been working in December, we have tax compliance items that we need to send out. One of those is called a 1099 to anyone that does contract work for your business. So right here, this real accounting, what's going to happen is you need to have them, it doesn't have to be like every single person that you pay money to, like you're not getting a 1099, a gas station, a restaurant. Those are legitimate businesses. But if you have people that are doing contract work for you, then you may need to issue them a 1099 at the end of the year. You're going to want to work with your professionals on that to make sure that when you go through your vendor list, that you know which vendors need to have a 1099 issued at the end of the year. So the reason why we issue that 1099 is because we want the deduction for the $100 on our end. So the IRS comes in and audits us, and they want documentation that you paid someone else a 1099. They want to make sure that's matching up, that you're taking the expense and they're picking up the income. Okay. So first thing that I would do is anytime I have a new vendor that I know I'm going to use over and over again for services, we're going to go in, we're going to type in their name. But first thing that I would do, if I can, is we want to ask them for this W-9. This W-9 form is just like when you're an employee, you have to fill out a W-4 so that your employer can issue you a W-2 at the end of the year. This W-9 is just like the W-4. We get the W-9 filled out so we can issue a 1099 out at the end of the year. So it's super easy. It takes someone 5 minutes at most to fill out this form and get it to you. So it's a W-9. It's a request for taxpayer identification number and certification. So all the IRS really wants to see is the legal name of the business. They want to know how that entity is structured, because this is going to tell us if we have to issue a 1099 at the end of the year as accountants, and then their address of where they are doing business. And then they're either going to put in their social security number or their federal identification number. So a social security number is given to us at birth. Federal identification number, anyone that sets up an LLC should get that federal employer identification number to show. It's just like a social security number to us. It's a number associated with the business. That's all they have to give you. And then at the end of the year, we have this information. We know that we have to give them a 1099. And so all of our data is here. Why this is important is because the IRS is cracking down on this. For penalties for requesters, failure to obtain Form W-9, you can start to get penalties ranging from $60 per form to $630 per form. You know, if you look at it, you have 10 people that you should have issued a 1099 and you just completely disregarded that you're going to issue those 1099s, $630 penalty. That can hurt the cash flow really, really fast. So we just want to make sure that we are not intentionally disregarding the fact that we need to pay a business owner, multiple contractors, 1099s. So we don't want that 630, and it's no maximum limit. So depending on how many people you failed to give out that 1090, that W-9, that 1099 at the end of the year is going to hurt your cash flow. Okay. So what I would do is I'd fill in the information based off of that W-9. Make sure you have as much information inside your QuickBooks as you can. And then what I'm going to do is going to make it super simple. We can do notes and attachments. So what can we do? We can just go in. Let's attach that W-9. Now we have that W-9 on file. And next steps from there, you're going to come down here to additional information. You're going to put in that federal identification number or their social security number, whichever one they put on. You're going to say track. You're going to tell QuickBooks to track this information. And so you can just easily at the end of the year have your vendor all the amounts paid, and then you don't have to worry about any penalties. So always like to come in here and just put net 30 on that as well. Okay. So now you're going to save. Now look at the compliance that you're doing. And I know this is tedious. This is painful. You're a business owner. You just want to go make money. You don't want to have to worry about all this back end stuff to run your business. I get it. Business owner too. It takes time, costs money. You gotta have employees to do it. So, but at the end of the day, we want to make sure that we're doing everything correct. Okay. Other than that, I think that's a good start for today on this. So if we just kind of recap, I always like to go back to my chart of accounts. It's kind of my starting point. And then I want to think, okay, what's going on? So if I got an invoice, do I need to go in and add a vendor? We got our vendor right there. Vendor tab's going to be keeping track of all of our open invoices. Check this out, 1099s that we're checking. This is going to be their email, their phone number in case you got to call a vendor real quick. And then we were just keeping it simple. We entered a bill, we paid a bill. And so in the other ones, we use check and expense. So if we just go and we write a check, then we're skipping that double check on any expenses that could be double paid. So that's why we have a difference there. Okay. And then we always want to make sure that we know what account all these are coming out of. So in this simple example, we're just using our bank sample bank register. That bank register is helping us categorize all of our payments and all of our deposits. So hopefully this video helps. We'll continue on in the course and we'll keep moving forward. Thanks for paying attention, guys.